Many families like to give charitably throughout the years to causes they believe in. We also see families like to give to kids, to friends, to families. Those don't qualify as charities. There's a lot of misconceptions out there when it comes to gifting, and today I want to talk to you about 3 ways that you can gift to friends and family 100% tax-free. Keep it right here. Good day, everybody. Chris Heerlein here of REAP Financial, host of Retire Ready TV on KXAN and host of Wealth Radio for over a decade now on News Radio KLEJ. That's every Saturday, 11 a.m. Join me there. If you enjoy our content, be sure and hit the subscribe button down below. I drop new content on this channel every single Wednesday. Okay, so when it comes to gifting, there's a lot of misconceptions around how much you can give, who you can give to without having to pay tax. And today I want to talk to you about 3 ways that you can gift tax-free. Now, when it comes to friends and family, a lot of people don't think they can give tax-free, and the gifting rules in this country are rather broad. So 2 qualified ways that you can gift to your kids, to friends, to families. The first one is for qualified educational expense. The second one is qualified medical expense. So if you're going to help friends, family, or kids through college, qualified education expenses include obviously tuition, books, lodging, and more. That gift can go tax-free. It will not count against your lifetime exemption limit, which is rather high. I'll cover that today. Also, if you wanted to help a friend, family member, child pay for medical expenses, as long as the amount is great enough that it would have been deductible on your Schedule A, well, in that case, it can go tax-free to them as well. So both of those will not count, I should better say, towards your lifetime exemption. Now, a lot of families, they like to give annually to, let's say, their kids, kind of help them along the way. And many families feel like they're tied to the annual gifting limit, which here in 2024 is $18,000. So if you have 3 kids, you could give $54,000 away tax-free, and that amount would not count against your lifetime exemption limit. Now, let me talk about the lifetime exemption limit. Here in 2024, it's higher than it's ever been in history. Your lifetime gifting exemption limit is $13,610,000 in this year, 2024. So if you're married, that means that you could gift literally $26 million to heirs without any sort of estate tax. Now, federal tax and estate tax is a little bit different. Now, estate tax means that's additional tax that's left on anything over the $13 million limit that I'm talking about here. So again, most people aren't all that concerned about estate taxes because your net worth has to be substantial. Now, it's walking into 2026. Right now, if legislation doesn't change, the estate tax limits will revert back to about $6-7 million per person. So a total of $12-13 million for a married couple. So it's still potentially going to be very high. The reason I'm talking about all this is because if you have money that's, let's say, in a checking account, let's say you've got $1 million sitting in checking, and you wanted to gift $100,000 to a friend, a family member, a child, and that $100,000 in this case could go to them tax-free. They would not be subject to a tax. You would not be subject to a tax, but because it's over the $18,000 annual gifting limit, that $100,000 would count towards your lifetime exemption of $13 million. So this is where I tell a lot of our successful families, if you want to help your kids buy a house, a down payment, buy a car, you can gift them exponentially more than the $18,000 annual limit. We've just got to make sure that's counted on your tax return, it's reported, and it will go towards your lifetime exemption limit. So that's a big misconception. A lot of people think, I can't give more, I wish I could, but if you have wealth, in many cases, it can make sense to give along the way. There's a number of reasons for that, depending on your net worth, depending on the type of money. If you've got most of your wealth in IRAs, you can't just give IRA money to a child. It would be subject to taxes. It would count as a taxable event, not to them, but to you. But when you leave your IRAs, 401ks to kids down the road, it is left to them as taxable income when they take it out, when they're forced to take it out. So there's a good look at some of the gifting rules and why there's so many misconceptions. You can see this. Now, when you think about gifting, it's got to be coordinated with your overall retirement plan. One of the biggest pitfalls we see in families' retirement plans is they're giving money, they're helping kids or family members, maybe even parents along the way. And I'm telling you, $500, $700, $1,000 a month can make a significant impact on your success, the longevity of your portfolio, how long it'll last for you. So your gift gifting strategy needs to be really well coordinated with your income plan in retirement and your tax planning in retirement and more. And this is what we help our families with each and every week here at Reap Financial. So if you have charitable intent, if you are planning to leave money to kids or gift money to kids through the years, I want you to get your hands on our updated tax strategies guide here for 2024. It's of no cost for our YouTube viewers. Email me right now, retire@reapfinancial.com to get our tax strategy guide. That's retire@reapfinancial.com, and my team will have it on its way to your inbox. Be sure to hit the subscribe button down below. I drop new content here every Wednesday. Until then, all the best.